Hello, good morning. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. On my left is, as usual, Kartik Malhotra. Also joining us on the show is Kranthi Bathini, who's a markets expert. I want to quickly begin with markets first. Markets opening in red, Sensex down by about 200 points. All of this on the back of MPC, perhaps?
Looks like, Shweta. So all indices pretty much, except for the small caps, you look at the Sensex, you look at the Nifty, Nifty Bank, Nifty IT, everything is giving a very, very deep red in the markets today. I think what we are seeing right now is perhaps a little bit of profit booking on account of awaiting the RBI MPC and retail investors there, and even institutional investors for that matter, looking at booking some profits in perhaps, if not hope, then in anticipation of maybe a little bit of a rate hike again, which seems unlikely because from what we've read and understood so far, RBI is likely to continue with its pause.
Let's quickly also get in Kranthi, who continues to be with us. Well, I'm told, Kranthi, how are the markets reacting? Policy stance unchanged, rate unchanged. This should calm some jitters.
Yeah, definitely, Shweta. Market has been swinging in between red and green. As market has been waiting for the growth prospects. As one good news is the MPC unanimously approved to maintain the status quo and also targeting the inflation the range of 4%, and also giving the approach of act to with preparedness. In case if the inflation looks stubborn, they are going to change their stance in the coming days. That's a very welcoming move from the MPC, and giving the more prospects to the growth. As I have to remind everyone, Shaktikant Das, the central bank governor, he is from the North Block. He was in the Ministry of Finance earlier. He was the principal secretary. So he understands the economy very well, how the growth prospects, what the economy needs, and what the entire growth needs. So he understands in a better way than his predecessors. So he always gives the importance to growth, and that's what the MPC unanimously taken a stance with respect to maintaining a status quo with respect to the rates, holding the rates, and waiting on to the inflation, and giving more emphasis towards the growth. So markets are swinging in between red and green right now at this point of time, but it's a positive move with respect to markets are concerned.
RBI Governor Shaktikanta Das had also mentioned just now, and you would have heard it as well, that there are these external factors which are likely to dampen the spirit of growth overall across the world. And it will obviously have an impact on emerging markets as well. But he feels that India is better poised to deal with those headwinds. Is that the sentiment when it comes to foreign institutional investors also? Because we've seen them also exiting the Indian market recently.
What we witnessed in the market from from the month of March, we have risen around 15% from March lows. Nifty is concerned. And also we received around $15 billion of inflows into the Indian markets in starting from March. So the money flow has been very strong. So 1-2 days we can take the exception, some kind of hot money, ETF money can be exiting on profits. So there is no imminent concern with respect to the 1-2 days sell-off of foreign portfolio investors. So far we received around $15 billion, one of the best inflows in terms of the emerging market flows are concerned. So there might be 1-2 days exceptions, but the flows can be continued, and also the DIS support also there for the markets at this point of time. So when FIs were selling, DIS have become the net buyers. So there is a neutrality. That's the reason markets are holding nicely at this range, maintaining 19,500 ranges at this point of time.
So with the inflation unlikely to taper off, and while the RBI is still saying, and Shaktikanta Das himself mentioned that the MPC is committed to hammer down inflation to 4%, despite that the rates have remained unchanged. Now compare this to the rest of the world. Let's say developed markets like the US are not ruling out multiple rate hikes. Now as a result of that, and I'm sticking to the FII question, are we going to continue seeing FII outflow into the US bond market?
Definitely, but we need to wait and watch because the Federal Reserve Open Market Committee, okay, they have a stance as they are mentioning indirectly. There might be a couple of rate hikes going ahead, but we need to wait and watch how the things are and the dynamics of the economy is going to change. One thing we need to mention is the Federal Reserve Open Market Committee commentary. If you have to see, once they said the inflation is transitory for more time, and they mentioned that inflation is sticky, and the feelers that comes from the Federal Reserve is completely uneven. And if you see the notes of the Federal Reserve Governor, the experts at Federal FOMC and the economists at FOMC, they failed to predict the inflation. That's what the quotes that comes from FOMC minutes. So we need to wait and watch how the exactly these all the things are going to pan out. But one thing to ponder, one thing to mention is U.S. economy is going strength to strength, and it is going at a strong note. So coming to the Indian
Are
markets,
you
okay,
saying Indian economy or are you saying US economy? Just to clarify.
I'm telling the US economy also.
Okay.
US economy also. The data, as per the data, US economy looks quite strong. And coming to India, okay, we are quite strong and quite resilient. That's where the FII flows going to attract the Indian markets, and also the recent MSCI changes giving high weightage to Indian markets, reducing China. That's also going to add some kind of incremental flows towards Indian markets. So Indian markets are quite resilient at this point of time,
Okay.
despite of the global worries.